Yo, welcome. Today's August 12th, 2024. And today's video is gonna be, or it's gonna be the live stream for today. Sorry for the wait, for the late start. I woke up late today, I'm not gonna lie. I woke up at like 8:30. My the New York AM session morning bell actually woke me up. I tend to wake up at 7:30, but I think I snoozed my my wake up today, and that kind of messed me up. So, but here I am. You know, what matters is that I am here today. I am here right now. So, yeah. Oy. All right. So my anticipation of us taking out previous week's high ended up being correct, and here we are. So we took out previous day high and previous week's high. They were both the same thing. So now, after we took out previous day high and previous week's high, that's where I'm going to be sitting on the sidelines and just watching to see how prices does its thing, because notice how we did trade up into this weekly fair value gap now already on a Monday. So us retracing back into this weekly FVG here. Now to be honest, I would just be on the sidelines and simply just be an observer of the markets. I want to see if, hey, are we going to get a reaction to this weekly fair value gap or not? I'm not gonna instantly take an entry because we retraced back inside this weekly SIBI. I need to see confluences that suggests the idea that okay, we're going to go lower. So I'm gonna wait until this 4-hour and 8-hour candle closes. So this 4-hour candle closes in about like 8 minutes or so, and the 8-hour candle is also about to close in about 8 minutes or so. So let's just watch how we close there, and depending on how we close will tell me if we are going to go lower or not. Notice how prices, look how far prices retraced into this 5-minute fair value gap here. It retraces very close to the consequent encroachment, but look where it stops. It goes 1 point above the weekly open, and then starts to sell off lower again. That to me right there is how do I explain this? That is very, very algorithmic, because prices are always going to refer to the opening price. It depends on which one, but this is the weekly opening price, so that's pretty important for a weekly time frame model. And yeah, let me get my things situated here. ICT is live right now. All right. I do want to go over the pros and cons of my trading last week, and I do want to go over my risk management plan this week with you guys. So this week I will be trading today at least, I'm going to be trading normal position size. It is a Monday though, so it's the first week. It's the first trading day of the week. Not much to anticipate, but yeah. So ES actually took out its high of day and weekly high as well. That's very nice to see. So side here. Okay, so ES also took out its previous day high and previous week's high, which is nice. So in about 5 minutes or so, it would, based on this weekly, or based on this 4-hour and 8-hour candle, will tell me if we're going to continue lower, and if we do get a bearish closure on the 4-hour, 1-hour, 30-minute, will tell me if I'm going to take this entry model here, if I'm going to take this entry model at the 15-minute or not. Well, based on this 15-minute candle's closure too, will tell me if I want to take the entry model at the 15-minute or the 5-minute. So like I said, based on this 15-minute candle's closure, we still have about like 3 minutes left for the closure. So based on how we close there will tell me if we are going to treat that 15-minute fair value gap as a breakaway gap, or a fair value gap that we retrace back into. Okay, so based on so we took out sell side on ES. This sell side level here, we took that out on ES. So just watch that. Note that. About 2 minutes left, so yeah, like I said, depending on how we close here on this 15-minute candle, will tell me if we are going to retrace into that 15-minute fair value gap, or I'm going to go into low time frames to get a lower time frame entry. 1 minute left. So we could have this model here. And about $5.40. That 15-minute candle's closure isn't as promising. So that's the two. So I'm gonna enter off of the 2 minute here because I'm targeting that. Like I said, I'm targeting that 4 hour, 1 hour, 8 hour, 30 minute, and based on this 15-minute candle's closure, I'm anticipating for prices to leave this 15-minute fair value gap as a breakaway gap. But yeah, let's see how we trade from there. My stop loss is at that 2 minute fair value gap's high. So now, like I've stated, we're in this trade now, so I'm just gonna have to be content. And like I said, I'm treating this 15-minute fair value gap as a breakaway gap, simply because the way we closed below this candle's low. So I'm just gonna treat this as a breakaway gap. So I want to see prices take out this 15-minute candle's low first before we even do anything. So let me mark out the 10 o'clock open because I'm selling above the 10 o'clock open here. And if you get stopped out, then it's cool because I'll probably try to re-enter at the 15-minute fair value gap if we get a retrace back inside there. I'll actually cut off seven contracts here just because we could get a retracement back. But like I said, it's either, you know, we could or we not. I'm just mitigating risk at this point. Wow, we were super close to being stopped out there. The thing is, I don't like how prices on ES took out this sell side level here. So there's SMT, but yeah, like it's just based on this, you know, 4 hour, 8 hour candle closure, I can anticipate for us to continue lower. And we just got stopped out just now. And like I said, that's fine because if we are, that trade is based on if that 15-minute fair value gap is going to be a breakaway gap or not. So we get a retracement back inside the 5-minute fair value gap here. So let's see if we can dig into the 15-minute fair value gap or not. So now what I would like to do is okay, so now what I'm gonna like to do here is I'm actually going to wait. If we get a retracement back inside this 15-minute fair value gap, I'm gonna wait for a actual reaction to the 15-minute fair value gap before I take any entries, because I probably won't take an entry just purely based off of the 15-minute fair value gap. I'm not gonna enter straight there. I'm gonna wait until we get a reaction to the 15-minute fair value gap. There's no need to put it. Well, prices refer back to the weekly open. Let's see actually. Because like I said, based on this 4-hour, 8-hour, and 1-hour candle closure, just simply purely based on its power of 3, I can anticipate for us to take out its low. But the fact is, even with that, I still need an entry model and a reason. So now that we traded back inside that 15-minute fair value gap, now here's when I would wait to see a reaction to the 15-minute fair value gap. If we get a reaction to the 15-minute, then that would suggest the ideas of us continuing lower. Oof, excuse me. So there's that right here. And like I said, I do want to go over the pros and cons and what I'm going to be doing better that trade. Or not trade, but better in this week in general. So pros and cons. I understood the reason why we created the bearish 1-hour power of 3. So what I mean by this is I'm pretty sure you guys already have a gist of how I trade now. It's fairly simple, but what I mean by this first pro I did this previous week is I don't take my entry based off of every single power of 3 that I see as, you know, bearish or bullish. There are times when I ask myself, why did we create this power of 3? Did we create this power of 3 because you know, we retraced into a 1-hour fair value gap, or did we retrace into a 4-hour fair value gap? I asked myself that question. Hey, did we why did we create this power of 3, right? And yeah, there's also I also took I understood the reason why we should treat that. Let's just go to the actual trade itself. So 8.5. What's up, Peter? So during Monday's price action, the reason why I said I treated that 15-minute fair value gap as a breakaway gap here on Monday's trading is like I said before, based on this 15-minute candle's closure. So based on this 15-minute candle's closure, I was anticipating for prices to take out this 15-minute low before we take out this 15-minute high. And yeah, and the reason why I took this, the reason why I said I know why we created this power of 3 is because of how we closed here. Based on this 1 hour candle's closure, I can anticipate for us to take out this low, and the reason why we created this bearish power of 3 is because of this 4 hour fair value gap. We retraced into a 4 hour fair value gap, and we had a reaction to it lower on the 15-minute time frame. What I mean by reaction is we had created another fair value gap, but on the 15-minute time frame that's bearish, and we had a hourly candle closure that's bearish as well. So that means we had a reaction to the 4 hour fair value gap. So the next pro I took this week was I took a trade that had different time frames that were aligned with each other. So there was time frame alignment with between maybe the 15-minute, 30-minute, and 1 hour. Second pro this week is we came into a higher time frame PD array and had a reaction to it on the lower time frames. Understanding how fractal prices is, I took a lower time frame model that was in confluence with the higher time frame narrative. So basically, this trade was 8/7. So this was on Wednesday. So Wednesday, higher time frame narrative here. This is the 4 hour. We came into a daily fair value gap. We retraced into premium of the range, and we started getting some sort of reaction lower here. Yeah, you can even see the reaction based on the 4 hour candle, but you can see it clear on the 15-minute. So on the 15-minute, we started getting this move lower here, right? But I couldn't get into any of this move lower because the way I trade, I simply was just here. I was just observing at this point because I wasn't giving an opportunity to enter. And the trade I took was I waited for a retracement. So notice how we retraced into the daily fair value gap and had a reaction to it, right? So keep in mind, I'm also trading a retracement model, but I'm retracing into a 15-minute fair value gap this time instead of a daily fair value gap. That shows you how fractal prices could be. And I don't actually trade this retracement back inside this 15-minute fair value gap. I wait for the reaction to it on the lower time frames. So on the lower time frames, we retraced into the 15-minute fair value gap, and we had a reaction to it. We created a 3-minute fair value gap. So that to me means that we had a reaction, and we also had a bearish 15-minute closure. So you know, I take my entries on the 3-minute fair value gap, and then I take my partials at the 15-minute low and then 30-minute low. 30-minute low, look at this 30-minute power of 3. It's bearish. I can anticipate for us to take out the low. And yeah, that's my pros for this week. So understanding lower time frame narrative and aligning that with higher time frame narrative. You know, taking trades that have multiple time frames in confluence with one another, and understanding why we created power of 3, and the you know, really utilizing my fair value gap theory. So one of the cons I had for this, some of the cons, or some of the, I guess, bad, or just learning the lessons I learned from last week is checking for SMT. You know, from now on, I'm probably going to check SMT a lot more, and I should have been checking SMT even last week in general. Second lesson I learned from last week is every single day, every single session that I'm going to be on the charts, I'm going to always have my trading view or my TradeAway account linked already before we even start the day. That just helps with you know, me being able to pull the trigger like on time, so there's no delay, because there was a time that happened that last week where, you know, I saw an A+ setup that occurred, but I wasn't able to take part of that trade because my TradeAway account wasn't linked yet. So, you know, my finger wasn't even at the trigger yet, and you're a sniper, right, in the markets. So if your gun isn't even prepared, or even if your gun isn't even in front of you, so how would you take that trade if your gun isn't in front of you? You know what I mean? So yeah, just next time I'm gonna have my so every single day coming into this week, I'm always going to have my trader bait ready before I even begin trading at 10 a.m. And yeah, that's my pros and cons. The risk management, let's go to the risk management part of the video. So, not video, but stream. So, like I said before, I'm going to be trading normally here this week, or I guess just today in general. And let me go back to the charts here. Do you see why I tend to always wait for a reaction at the 15-minute fair value gap? One of the reasons why I don't take the model at the 15-minute fair value gap is because of this very thing happening here. We completely disrespected this 15-minute fair value gap. We cut a closure. We had a candle closure above it, indicating that there's strength in the markets and that prices are weak. So this is why I wait for that reaction. So this is the reaction we had. Or you can say we didn't even have a reaction to it. So us having no reaction to that 15-minute fair value gap tells me a lot. That tells me we're bullish. We're disrespecting a bearish PD array. So I can actually note out this now. This SMT. So I can note out that SMT between ES, oops, SMT with ES, and yeah, let's just see how far we can go. So here we can use, I'm going to use standard deviations. From this swing low to this swing high, I took standard deviations from that because you can view this as the manipulation leg. So there's -1 standard deviation that aligns with this buy side level, and -2, -2.5. So if I were to long here now, I would use these standard deviations as my TPs. And standard deviations, they're always higher quality whenever they align with already existing buy side levels. So this existing buy side level here, that's and you know, that's just extra confluence. So notice how that -1.5 standard deviation aligns with this buy side level. That's very good to see. Alright, so back to the risk management. So like I said, I'm trading, I'll be trading normally here. I'm not going to be de-risking myself. Trading micros normally. Like I said, my first ever trade today, I'm going to be risking $480 if it's a 1-to-1 risk to reward, and 720 if the risk to reward is a 1 to 1.5. So yeah, 1 to 1.5 risk to reward if it's a, or I'm risking 720 if it's a 1 to 1.5 risk to reward. And I am going to be trading a little bit riskier. I'm going to be risking 20% more just these upcoming weeks. So this 480 actually becomes 576, and this 720 actually becomes 864. Just because I just wanted to, you know, complete something a little bit faster. So notice how, like I said, this trade I actually took about a $480 stop out because of it's a 1-to-1 risk to reward, right? And I actually closed half of my positions here whenever I saw us disrespect the 2-minute consequent encroachment. And yeah, my second trade, let's say if I were to take the second trade today, if I had won my previous trade, then I would have only been risking half of my profits. But since I lost it, then I will be trading, or I'll be risking $240 as my maximum stop loss if it's a 1-to-1 risk to reward, and if it's a 1 to 1.5 risk to reward, then it'll be 320. And third trade, same concept. If I win my second trade, then I'll be risking half of my profits. If I lose my second trade, then $120 will be my maximum stop loss if it's a 1-to-1 risk to reward, and if it's a 1 to 1.5 risk to reward, then I'll be risking 160. And like I said, I'm be trading 20% more aggressively, so 240 is probably like 260 maybe. But yeah, some of the rules here is I cannot take any models that is below a 1-to-1 risk to reward, and my risk to reward should be set to where I take my first partial. So what I mean by that is, notice how the first trade that I took this morning, even though this sell side level is my my target as well, I set my risk to reward at where I would take my first partial, which is that 15-minute low. So that was my what the model was. I didn't have it set to here because I'm not taking my first initial partial at the sell side level. That would have been maybe like terminus actually, but yeah, my risk to reward is set to where I take my first partial. And when I'm taking a partial, I'm always going to be taking off half of the position. So in this trade, I had a total position size of 14, and if my first partial were to be taken, I would have taken off 7 contracts, and I would have moved my stops to break even. And in my next TP, I would have taken off 4, and then just continue to take off half until my terminus gets taken. And that is it for the risk management part of the video, or video stream. And I'm going to also be going over A+ trading setup. So some aspects about A+, or like what makes a model an A+ setup. So the reason I can, so the first thing that makes a model A+ setup is I'm able to answer the question, why did we create this power of 3, right? So the trade that I took today wasn't actually based off of why we created this power of 3. I was trading it as if, okay, I'm treating this 15-minute fair value gap as a breakaway gap simply because of how we closed here on the 15-minute candle. So there's not really a reason why, and I don't understand the reason why we created this well, actually I do, because we came to a 5-minute fair value gap, and like I said, I would give this trade a A+ setup, or an A setup. It's just one of those trades where I would have taken every single time, and I'm not afraid to mention that. It's a part of my model. Like, that's just how I trade. And I would have, based on my performance, I would have taken this every single time. I give my performance today an A+ performance. It was simply because of how I managed myself and my emotions and how I managed the trade. There's that. So the second aspect to a plus setup is time frame alignment. So we had time frame alignment between the 15 minute, the 30 minute, the 1 hour, the 4 hour, and the 8 hour. So just having those confluences in mind already, you know, having those alignments together makes my setup an even higher quality setup because there's time frame alignment. The third aspect is I always want to be selling above the opening price, or I want to be buying below the opening price. So here I'm actually selling above the 10 o'clock opening price here. So you know, we opened up at 10 o'clock, we priced higher into the 2 minute fair value gap, and then we got stopped out. But you know, usually you want to see create that open, high, low, and then close. That was what I was anticipating for the next 15-minute candle to be. And yeah, if the lower time frame model is aligned with the higher time frame objective, we didn't really have that. It was just more of the yeah, we weren't really targeting like daily highs and lows or anything like that. We were simply just trading the 15-minute, the 1 hour, or the 15-minute, the 30-minute, the 1 hour, and 4 hour model. And yeah, I guess that's some of the aspects of an A+ setup. Alright, let me choose a motivational. Quotes over stoicism. We have power over our minds, not outside events. Realize this and you will find strength. That's very true, Marcus Aurelius. He is the one that introduced to me that very concept after reading Meditations. Well, I mean, I've always really kind of had known that, but oops. What's that? So we took out that basically pre-market highs. So let me mark that out as pre-market high. So from here I would watch to see what prices does on this 5-minute candle here. You know, we could get a retracement back inside this 5-minute fair value gap, and then take out that 30-minute and 15-minute high. Like I said, if I were to base my trade here, it would be based off of this 15-minute fair value gap again being a breakaway gap, and there's time frame alignment between the 15-minute and the 30-minute. So like I'm anticipating this very next candle to be, you know, an open, low, high, close candle. So I want to see us take out this 30-minute high and this 15-minute high, which are in alignment with one another. So let's see what this, I would have my stop loss here. Yeah, it would maybe look something like this. Treating that, you know, well, there's not really a 5-minute fair value gap anymore. Let's just watch. We still have 10 seconds left. Yeah, I'm not gonna take this. Actually, I'm not gonna take this model. Simply, yeah, it's a 15-minute. It's not. Yeah, I wouldn't take this model. It's not much. So I would anticipate for us to take the 15-minute and 30-minute high here, but you're probably gonna ask yourself, like, why are you not taking an entry? Why are you not trying to find an? It's just I don't have as much confidence as I did with this trade compared to this trade here. I don't have as much confidence in it. Yeah, it's just that simple. I just don't have that confidence. If we had a more, you know, bullish 15-minute closure, and we had created a more dominant 5-minute fair value gap, then I would have maybe taken something. But the fact is, we didn't create that. You know, that really strong 15-minute closure. So this right here would be just a hypothetical setup here to target that 15-minute and 30-minute high. I don't usually trade purely based off the 15-minute model, but because there's alignment between the 15-minute and the 30-minute, that gives me more confidence. So here, this is just a hypothetical setup. Like I said again, hypothetical. I'm not actually in this, but I would be targeting the 15-minute high and 30-minute high. That is what I would believe the next draw of liquidity as of right now. And like I said, we're still within that weekly fair value gap. So I'm not really, you know, too keen on what we could do here. But yeah, because it's a Monday, I could see us go a little bit higher, and then maybe Tuesday or Wednesday we could create the high of the week. But yeah, let's go back to the 15-minute time frame here. Still 1 minute. So like I said, this is just a hypothetical setup. Entry is based off of the 3-minute fair value gap. Stop loss is also based off the 3-minute fair value gap. Targeting 50-minute and 30-minute high. I'm gonna be right back. I'm gonna get some water. Possibly some food too. Alright, welcome back. Hey, look, my hypothetical trade actually panned out. That's nice to see, actually. So, oh, do I really have to type in 3 minutes? Just type it in. 3-minute FEG. So, we retraced back inside that 3-minute FEG, and we had a reaction to it, taking out that 15-minute and 30-minute high. Like I said, I didn't feel as confident as I to take this trade, but here ICT, there's a one thing that ICT does teach is he talks about how old highs could become support levels, and this old pre-market high, look at how prices uses it, retraces into it. None of the bodies on the 1 minute time frame close below it, and it simply uses it as a support level, which is, you know, very nice to see. And like I said, -2 to -2.5 would have been my next you know, TPs. Very nice reaction to the 3-minute fair value gap. From here, I don't know, like the reason we're inside this weekly fair value gap here, so it's just kind of like it's like iffy, because I'm not too sure, like, well, I mean, we're simply observers, so we'll see for sure by tomorrow or Wednesday if we respect this weekly fair value gap or not. Like I said, in my weekly market outlook, here and Q is I was anticipating for the weekly objective to be previous week's high, and Monday's objective is to be previous to high. This played out like to the T. I will trade intraday models after we take out previous week's high. So, I mean, I'm still allowed to trade, you know, lower time frame models, but and there wasn't really any entry models for me to, you know, take to target the previous week's high. And now we're just simply watching prices. I have to keep in mind that we are trading within a weekly fair value gap right now. No, it's not a piece of meat. The 15-minute fair value gap. See what we do whenever we retrace back into it. continue to chase it. Oh. Now I can take this opens file and start working my so if I go here, let's check mate actually. Wait, I go here. I go here. Oh no, that's not actually, so let's just let's continue to build my platoon. Trying to get here, so I love playing chess during the morning. It just gets my brain going. Get this free pawn. I don't think I'm really under attack on anything, right? I'm still protecting this square. He goes here, I just take. He goes here. Then that's when he's threatening this move. If he goes here, then simply I go. Oh, muchacho, very very good muchacho. Very good muchacho. Isn't that cool? That's not very buenos dias of him. I think if I take this knight, he takes here and then I take his queen. That's if he doesn't see that though, but go here, but his knight is under attack. Wow, what an amazing font. What is he doing? Oh, he just... Is he... Now, is that equal in pieces now? Even in pieces? Wow, I almost... Well, he lost, actually, now. That was a clear blunder. So, I don't know what he was trying to do. That move, this knight move was... I mean, he had a triple fork, but all I had to do was take here. And then... I didn't even see this bishop, to be honest. This bishop was good. Yeah, I was just winning in the position, to be honest. I was... How did I almost miss that? Oh, I mean, I didn't miss it, so... Let it go. Let it go. You can only control your mind. That's sad. Alright, I'm gonna throw some food and I'll be right back. Dude, your sock says jump on it. Alright. Alright. So pay attention to how we close here on the hourly time frame. This hourly high, I would consider to be the draw liquidity at the moment. So it depends on if you get a, an entry model to target that high, but yeah, that would be the draw of liquidity for now. If we take out this hourly high without giving me an entry model, I'm actually going to just end the stream here. We've been streaming for about an hour and 13 minutes now, so a fairly amount of time. Not too bad. I hope you guys enjoyed the chess game. I feel like, let's see what some of the moves I did that were not that. Oh my gosh, this guy's game rating was 500. Here. I take that pawn. Goes here. If he goes here, right? Then I can just go here, and then he takes here. And this square becomes attacked. Like, majorly, so the number is I go here. I'd have to go here, and then I lose a queen here, actually. This move up would actually kind of be bad. This move, he goes here. Then I think I would have to move my knight back. But I can't because if I move my knight back, then my bishop's under, wow, that's actually really strong. Yeah, I was thinking of doing this move. Oh my gosh, why didn't I just... Well, because if I could take here, then he takes here, he puts me in check. And then I can just move my queen to protect my bishop that's here. But if he takes my queen, then I move my king. And then now I can't castle. Alright, so we just took out that 1 hour high, and yeah, that's gonna probably be all for my, so like I said, that hourly high was my draw liquidity. But yeah, thank you guys so much for watching. Until later.